All right, why don't we get going? I am with Gene Case. Gene is an amazing person. I've been doing a lot of research, interesting research on you, Gene, and I've learned that you are a number of things. You're a leading global business executive, surely, a capital venturist, if that's a word, a best-selling author. And I did read your book, Be Fearless, and I recommend it to all of our listeners if you're interested. It's a very uplifting, motivational book for those who are in the nonprofit space in particular, I think, but application everywhere. A philanthropist and a mother of 5. I don't know how you do it all, but congratulations. And you have long been an advocate. I see through all your material of DEI, diversity, equity, and inclusion, in both the investing world, so the for-profit side of the equation, and in managing businesses in all of your nonprofit work. So that's a nice mix. The topic today, everyone, is, and I think Gene brings a uniqueness here that is really special, is about your knowledge and leadership in the areas including impact investing and ESG, environment, social, and governance. And we will be discussing the implications and the applications of these ideas for our space, the nonprofit space. Gene, most of the folks on this call, as you know, are in the nonprofit business one way or another, either working for nonprofits or working around them and helping. So we've got a very focused audience, I think, on these issues. Just to introduce, for those who are not familiar, Orr Group Talks is the series that you are part of at this moment. It's a series of conversations with accomplished executives like Gene on topics that we feel are impactful for the nonprofit sector, which is Orr Group's exclusive focus. And today's format, as always, is I'll have an open discussion with Gene on a variety of topics. We'll go back and forth, but please insert any questions you have or comments in the Q&A function on Zoom or in the chat. So I'll try to integrate them into the dialogue as best I can. So I'll just start by saying, Gene, thank you so much for joining. Really, your breadth and depth in terms of what you've accomplished in your life is amazing. And the detail I think that you can bring around this conversation will be very, very interesting. Not only have you wrote down, did you write that very fascinating book, which is right behind you, Be Fearless, but you have many, many articles out there and lots of positions that you can bring a lot of experience to. So if you will bear with me, what I'd like to do is just establish some things on the personal front. When I read your book, I realized right away, and you feature it as well, that you grew up in a place called Normal in Illinois, and I grew up in the Midwest, so I kind of get the significance of that. But can you just articulate what you think the significance of being normal and growing up in Normal is all about?
Sure. Well, first of all, Steve, thank you for having me, and thanks to everyone who's with us. As Steve knows, as we were getting ready for this, I had a few tech problems, and I apologize in advance if my Wi-Fi goes wonky on me. We're hoping we make it through with no issues.
We will be good.
Yeah, so thanks so much for having me. I've really been looking forward to this, and I appreciate all that you do. And to everyone who's with us, anyone working in the nonprofit sector today deserves extra kudos. So yeah, I do think it's actually kind of important that I come from a place called Normal. Because if you're going to write a book called Be Fearless, I think it's important to establish that, everyone has humble roots, and everyone starts out with people questioning or maybe not being confident that they could go on to do some special things. And that was certainly the case with me. I had a cornfield in my backyard, and it was a pretty small town. Some of you may know it. Illinois State University is there, so it's a college town. But our work in Be Fearless really is premised on this idea that it is ordinary people who do extraordinary things. And as I look back at my life, I am very ordinary, maybe in some cases substandard.
That might be a stretch, Gene, but okay.
Very true, though. And I think there's this myth, which I tried to debunk in the book with both data and with storytelling, that people who do extraordinary things really do start out in life without necessarily the things we associate with what it takes to be successful. So I'm glad I come from Normal, because it really grounded me in this world and helped me understand that once I started to find success, anyone from anywhere can.
And then you moved to Florida, Fort Lauderdale, and it sounds like the influencers in your life were primarily your mother, your grandfather, your brother, if I had that right from your book. And so what role did they play and how close are you to them today?
Yeah, well, I lost my mom 11 years ago, but she was a huge role model for me. She was a single mom raising 4 kids alone, working as a waitress at night. So I'd come home from school and she'd go to work. And she was fearless in her own right. And I really believe it was her sort of belief that I could do anything I set my mind to do that influenced how I looked at the world and the opportunities that I might have. So yeah, she was a huge role model. I also had a role model who, I was introduced to as a teenager. I thought I was going to be a lawyer. And my school arranged for an internship with the then town judge, who went on to become mayor and then congressman. And he played a really significant role as a mentor to me. I write in the book that I come from a working class family. I grew up in working class neighborhoods. And it really wasn't until I landed in his law office that I began to understand, oh, there's a different language people use. Oh, they dress differently. How they comport themselves is a little bit different. And so it was, I think, a really important experience for me to have. It was really maybe my grandparents were entrepreneurs. They had a hotel that they ran. So they were small business people. They had had quite a few small businesses, German immigrants. But it was really that first experience with sort of business and the professional world that I think played a key role early on.
And it sounds like that relationship with the congressman working in his or her office got you to Washington and a role in the Reagan administration,
That's
which,
right.
yes, I presume that's how you got to DC. And then through a series of other professional jobs, you ended up at a little company at the time, not so little as it turns out, called America Online. Now, there are a number of folks on this call who may not be as familiar with AOL as you and I are, but just to understand that back in the day, that was the route to the internet. 50% of all traffic went through AOL. You remember the movie You've Got Mail? That was all about AOL, but seriously innovative. And you had several senior positions in that company in the marketing, communications, and other areas. And as I understand it, you left in '96 and then started the Case Foundation in '97.
That's
So I think,
right.
yeah. And one more thing, you married Steve Case, who was also obviously at AOL in '98.
Yeah.
And you were married by the Reverend Billy Graham. Now, how in the world did you swing that?
I think it's funny that we talk about AOL, which I'll go to before I touch on
Okay,
Billy,
good.
because actually they're connected, believe it or not. So AOL, as you said, really ushered in the internet era for the average person. When we got started, only 3% of people were online, and they were online 1 hour a week. So as we do this 1 hour Zoom together today, we're blowing our wad for the week. Okay, at least back in that day, that's what it would have been. But how we came to know Billy, our first ever nationwide conference, I mean, it could have been a Zoom if Zoom had existed back then. Our first ever nationwide interactive conference online was with Billy Graham. Time magazine had him on the cover celebrating his 75th birthday. And we did a partnership with Time magazine way back in the day. Billy loved it. He is known for a lot of things, but one thing Billy was really keen on was staying on top of latest trends and newest technologies to reach people. So he was really delighted when he was able to be, truly, it's historic, the first national conference in the nation that went out to people everywhere.
So just to complete that story then, Steve went on into the merger with Time Warner in 2000, but you started the Case Foundation in '98, and you're the founder and CEO. So I imagine you were pretty much doing that alone initially because he was pretty busy.
Yeah, I mean, I think one of the things, and it comes up in a lot of things that we talk about, but one of the things we realized was that maybe as partners together, divide and conquer made sense versus kind of staring at each other and saying, well, who's going to make this decision? So it was pretty clear right out of the gate. I had stood up the AOL Foundation in my years as a senior executive there. And so had, a little bit of an entree into the foundation world through that. So it made sense really for me to take the lead with our family foundation. Steve, I of course was CEO and Steve was chairman, and he was an important champion and supporter and engaged in a number of things that we did. But he did not have an active leadership role day to day. And that worked well for us because he was really focused on his investment business Revolution. And that enabled me then to really take on, full-time the work of our philanthropy.
Yeah, and everything I've learned about the way you approached it, I mean, you describe it as a vibrant laboratory for change. And personally, you've described it as your most ambitious challenge of your life. And I have to imagine it's because of the diversity of issues that you've dealt with. And you've taken on a lot of, national and global kinds of issues that are phenomenal. Congratulations and a lot of respect. You also are the chair of the National Geographic Society. And that, as I understand, is the first time a woman is the chair of that nonprofit. So congratulations on that. What are your reflections on NGS?
Oh gosh, I think sitting in the chair role at the National Geographic Society has been the greatest privilege of my life. It's an extraordinary 134-year-old institution, but we like to refer to it as a 134-year-old startup because risk-taking is in our DNA and fearlessness is in our DNA. And so it enables us really to almost constantly reimagine and reinvent ourselves, to stay current and more relevant than ever before. And how that's reflected today, Steve, is, we have the world's largest social media footprint of any brand in the world. So bigger than Nike, bigger than Coke. And really, I think it's people's true love for the spirit of exploration and expedition and the very rich treasure trove we have of photographs and videos that, as you know, social media really thrives on. So we've been very fortunate on that front, but we're always peeking around corners. And I want to say to the nonprofit leaders that are with us, when I wrote Be Fearless, I would say I wrote it as much for the nonprofit sector as for anyone. Because I think, I can sometimes really feel your challenge, which is you're funded by others, which oftentimes might make you feel a little boxed in terms of the mission that you have and the risks that you can or cannot take. And, I think one of the things I've really called on is in philanthropy, I think it's critical that philanthropists give nonprofits freedom to understand where do they need to take the business, where do they need to take the business model, what innovations can they drive to extend and expand their mission and reach. And I don't see enough of this in the nonprofit world. And it's not for lack of desire on the part of the leaders. It's often this sort of really feeling hemmed in because of who their funders are and what they ask of them.
That is so true. And that's exactly what I was thinking as I read the book, because I started up a nonprofit in New York City, which has become fairly sizable. And, so I was on that side, but most of my professional life as it pertains to nonprofits has been helping others raise money and run their charitable organizations. It is a stressful job. I mean, I've always say it's harder than being in the for-profit space. And I think your book really goes to that combination of, the passion it takes to be an effective leader in that area, but then constantly having to satisfy donors, not be able to go to the capital markets and raise money, through an impact. Well, you're going to discuss impact funding, and that's an option, but you can't just typically go and issue equity and that type of thing. So,
yeah, I think that's really true. And I think, risk taking is something that nonprofits really struggle with. I think there is a sense that if risks are taken and there's failure, that the donors will walk away. And so I think it's really important that donors have dialogues with those they're funding with risk-taking on the table. What risks do we need to take should be a conversation between every funder and every nonprofit. And, we tried to have and have tried to have kumbaya moments a little bit, Steve, with those we fund, not only to encourage them to take risks, but also to say, look, the clear expectation going in is we're trying something new. By its very nature, we don't know if we're going to have success. But if you deliver on executing on what we're trying to do and it doesn't work, we're still going to be behind you.
So you signed the Giving Pledge in 2011, which puts you in rarefied air in terms of the audience you're speaking to right now. So as a major funder, then you were telling us that you appreciate the risk-taking model. I'm sure you appreciate the actual metric outcome as well. But why don't you talk about that? I mean, when there is failure or when there is success, how does that impact your willingness to give in the next round?
Yeah, well, again, I think that we have to separate what kind of a failure we're talking about, right? I think when there is that partnership, that MOU, if you will, between the funder and the nonprofit, and you understand together the road you're starting down, there has to be agreement that there'll be checkpoints along the way. And, as long as there's good communication and the nonprofit is doing what the funder expects in terms of executing, I think if things go wrong, that's sometimes the greatest moment of learning. That's the whole point of Be Fearless is, make failure matter is a very critical principle in innovation. And in fact, if we look at science or technology, in the lab, you can't actually advance without failure. It's the failures that teach you how you can get better. And so in some ways, it's not like we want failure and no one likes failure, but I think it really does play a role in how you ultimately perfect or really drive forward an idea where both what can go wrong and what can go right. And you've learned those lessons along the way and applied them.
So to me, that is the uniqueness of your message and your experience is that you've been on the side of, startups, successful company, AOL, and now you're investing, I think you have been over the years, been investing in a lot of different startup and venture capital kinds of things. And that mindset, is really valuable to have in the nonprofit space. I mean, I come from a financial background as well, so I get everything you're saying. It's just, I think, that I always try to infuse that sense like you are doing right now, into my clients and into my partners to say that, hey, it's worth taking that risk because that is how you build great models.
Yeah, and if I can just talk for a minute, I think I learned this lesson in a variety of ways through my life, but the one that was probably most public was a very large clean water initiative that we actually helped lead, and it was housed at the Case Foundation, and I chaired that board. And we desired to put 1,000 clean water interventions in villages in sub-Saharan Africa across 8 countries. When we got started, it was great. And we had a number of donors and partners, including the US government, by the way, who had money and backing of the initiative. And things didn't go as we had planned. And we started to see some problems out in the field. So we did what anybody would do, and that is we tried to course correct. We did that for about a year, and still we really couldn't perfect the model. And so it got to a point where we really had a decision to make. Were we going to stay the course, or were we going to acknowledge that the initiative was not working? It worked in plenty of villages, but it wasn't, guaranteed to work wherever we went.
Scale.
And, we had a tough conversation as a board, and we decided we were going to go public with it. And I wrote a blog called The Painful Acknowledgement of Coming Up Short. And I acknowledged what had failed and what we had tried and what did not work. It was a real turning point, Steve, because I remember being so nervous about hitting the send button on that blog. But it turned out a number of nonprofit leaders reached out and actually and it opened up really a lot of dialogues, and we began to have these things called fail fests, where we get together behind closed doors under the radar, serve a little wine and beer, because that always helped in terms of storytelling.
Indicates it, yep.
And we encouraged one another to just share what were some of our failures and how could we learn from one another. So, failure is such a powerful teacher, and yet in too many sectors, it's seen as a shameful thing. But entrepreneurs often wear it as a badge because they understand that's how they ultimately get better.
So before we get into impact investing in ESG, which we're about to do, but you have this feature called For What It's Worth. Can you explain what that platform is all about?
Sure. Well, I've been engaged in impact investing for a really, really long time before there was a name for it. And very, very passionate about the idea of using capital to drive change, investment capital. Obviously, I've done a lot on the philanthropic front, but this is over here with an investing hat on. And the other area I've been deeply engaged in is with next generation. And we led the largest single study of next gen, particularly millennials in the US, with over 100,000 who participated over 10 years. And we were looking at their attitudes and sort of beliefs around social good. And those two worlds started to collide, Steve, because, first we saw all kinds of, let's say, intentionality on the part of next gen. But as they matured, as they got into the workforce, as they began acquiring assets or savings, they wanted to move from conscious consumers to conscious investors. And so it became very clear that there is a wave building. So today, obviously, there's a big drive toward ESG among next gen. And, when you talk to them, really, and I've spent so much time with young folks everywhere who are really trying to put their capital to work, they lack sort of the knowledge and the competence, and they're not alone. Chances are people on this call lack knowledge and competence. I have to work hard every day to feel knowledgeable and competent in the area because a lot is changing. So our newsletter comes out every Thursday, and it's called For What It's Worth.
All day on this. Yeah, there you go. You're back.
Oh, sorry.
Wait, say that last part again, because I think that was good.
Okay. Our newsletter comes out every Thursday. It's called For What It's Worth. And it really is intended to handhold investors new to ESG. We bring a particular eye to next gen. We try to take away the jargon that is too often used in this investing arena, and get people comfortable and knowledgeable around what does it mean to be an ESG investor? What are my opportunities? What do I need to know?
Got it. Okay. So go to that platform. Is it free, or is there a...
It's totally free. As I said, it comes out every Thursday afternoon. And we'd love for, anyone in this audience, we'd love for you to take a look at it. I'd really love to hear from, nonprofit leaders bringing your eye to it. It's been surprising to us. We really did intend it for individual investors who are next gen, but what we found is sort of doesn't matter what your generation is. There are a lot of people really interested in following this space and learning more. And so I'd love to see, we need more engagement by the nonprofit sector around ESG, and would just love anyone in your audience that's interested in it. And I see there's an interest in getting it in chat, and we'll put the link in chat. It looks like my team just did. But if you do look at it, I have thoughts and your perspectives on what we're bringing forward every week.
Jean, your internet's getting tough. Let's hope it's not going that direction all day. Are you back? Jean, can you hear me?
Yes, I think I'm back. I can hear you. Can you hear me?
I can hear you. You're frozen, but it's okay. All right, so let's move into impact investing and ESG. So that is where we wanted to focus the substance of the dialogue. So impact investing, interesting. It's relatively new, actually, and I do think there's a gap in terms of understanding exactly what impact investing is. So I'm hoping we can start there. Could you sort of define what you think impact investing is, and what has been your involvement with it? Because I think it's been pretty extensive.
Yeah, well, as I mentioned earlier, I've been engaged in impact investing for a really long time. And as we define it, we say it includes investments or companies and funds that intend to bring both a financial and a social return. And we probably should add to that, also environmental benefit. That was always, before ESG, that was always included in social return, but we should probably spell that out. So how is that different than ESG? It's actually quite different, right? Because in ESG, you could have any company or organization or fund measuring against a certain number of factors. In impact investing, the very products and services themselves are designed to bring a social benefit. So quite different than just any old company looking at diversity or, thinking about their carbon footprint. So I like to use Warby Parker as a great example. And Steve, am I coming through solidly for you?
We can hear you. You're
Okay.
a little frozen.
So Warby Parker, some of you may know. Oh, I'm so sorry. And I'm even wondering if I should stop my video, but if the audio is okay for you.
Audio is fine.
It was bound to happen one of these days after 2 years of doing this. What can I say? And I'm sorry it happened.
We've all become accustomed to it. It's okay.
I have not. This is my first.
We just thought because you come from AOL and Techland,
exactly,
that you have a better system,
Exactly. All right. So anyway, I like to talk about Warby Parker as a great example of an impact company. Many people know them for their super cool and hip eyeglass, wear. And that's what they do. And they are clearly the leading brand in that space, particularly among next gen, but more broadly. But for every pair of eyeglasses that you buy from Warby, they enable somebody who otherwise couldn't afford them to receive them. So it's a little bit of a one-for-one model, and that's the impact. And I like to say in impact investing, it's really important to have measurement standards and transparency. And so in Warby's case, you can actually understand the impact because it's one for one with every pair of eyeglasses they sell. The impact is even stronger. There are impact companies that don't have that one for one model. They're offering, I'm working with a female entrepreneur right now who has a concussion diagnostic that's very impact oriented. And that's a great example of a product that brings social benefit to the world, in this case, truly healthcare benefit. So, they can range, but impact is very different than ESG.
So here's the way Bridgespan defines it in an article I read, that impact investors prioritize social and environment returns in their investments over monetary returns, but still expect some financial return. So I take that to mean that a nonprofit, could raise capital through impact fund, but they would be able to pay a slightly smaller financial return in exchange for providing social value. So do you see that side of the business? I mean, as I look at the numbers, 2020, there was $2.3 trillion invested. That's about 2% of AUM, assets under management. And that, it's a lot of money. But do you see that as being the power of impact funding for nonprofit organizations? Or do you see your example, of combining, doing social good around a for-profit company? Both, are they mutually exclusive?
So Steve, I'm happy to go in. I'm seeing some suggestions in the chat that I turn my video off, which I know will.
But my fear there is that all they're going to be doing is looking at me, which is terrible. But if you need to, go ahead.
It's your preference entirely. Again, I apologize. So I do want, I think there are terrific opportunities for nonprofit, and coming with my National Geographic lens, I couldn't feel any more passionate about this. So we have a subsidiary that is a joint venture with Disney. So we created this. The original JV was created in 2015. Our original partner for that was Fox, because they were our partner to deliver the National Geographic channels. But then we added all of our commercial businesses into that. So our product sales, our result of that is it created for us a $1.3 billion endowment at the National Geographic Society, which we never had. And about $100 million a year comes over the transom to fund our work. So I think this arena of nonprofits thinking creatively about for-profit avenues that they can pursue, I think it's highly under-leveraged. I think there are many nonprofits that if they step back, could actually find some places in their business model where they could actually look at building revenue outside of donations.
So is it just the very large organizations like National Geographic that are using impact funds as an alternative to raising capital, do you think? Or is
No,
it
not
much
at all. No, I think that, it's funny because because of my National Geographic experience where I've been engaged for so long, I've worked with a number of different nonprofits from small to large to take a look at this and to basically, sometimes it's like, you can't see your own value when you're assessing it. It often does take an external lens coming in and saying, there could be some market value for that piece of what you do. So I want to be clear that it doesn't take everything that you do and suddenly, put it up under a for-profit, but often there are hidden parts that might have, some earned income opportunities, that might be products you could spin off, or new ventures you could spin off, as we did with Disney. I just think it's quite common when I spend time with a nonprofit leader that I could see ways that they might look at expanding their business model.
So by way of comparison, when you bring ESG into the equation, we're developing a lot of expertise in this category because we've been asked by those who hire us to do work to actually, assess how widespread is ESG in the nonprofit space. And it's really phenomenal for our audience. Let me just give you some numbers of in the for-profit space, i.e. in the investment community. ESG investments went from like 35 trillion in 2020 to they're expected to go to 50 trillion in like 2022. And that's out of a total investable environment of 140 trillion. So you're talking about a third of investable money going into ESG highly rated companies. Now that to me is a phenomenal statement. I really didn't realize that until I started researching this. But then I look at the nonprofits and I talk to nonprofit executives, and we've actually done surveys. And I've come to realize that there's really a very low level understanding in the nonprofit community of ESG, which means to me that, governance is not really being addressed in terms of, of being more diverse by standards that are imposed by the board. The CEO is not necessarily being measured on these type of ESG standards, et cetera, et cetera. Donors, I'm not sure, if they're judging a charity by, sort of the ESG standard. What is your take on that? How important do you think this is for the nonprofit sector?
Yeah, I think it's critical, Steve. And as you know, when we first talked about this day, I have such a heart for the nonprofit sector. This is one area where if there isn't acceleration of both knowledge and practice, I fear many nonprofits will get left behind because the clock is ticking and donors are asking. And, more importantly, I think ESG, chances are at least some aspects of it line up fully with the mission of many of the nonprofits that are on this call.
There's that, yep.
So really, in some ways, yeah, they should kind of be first to the game. But, it's not uncommon when you don't have the resources that a big company does, or, the private sector more broadly, to be a little bit behind the curve as change and trends come. We saw this with social media, and we undertook a couple of years of working with the nonprofit sector to get them ready for social media, the wave that was coming. And Steve, I really admire the work you're doing in trying to drive this in the nonprofit sector, because, I feel pretty confident saying that I can't imagine sitting in front of a prospective donor. I don't know if that's 2, 3, 4, 5 years down the line, but it's coming, and not having a good story around your own ESG journey as an institution. So I really want to encourage the leaders on this call to make it a real priority to build your knowledge and begin to look at ways within your own institution that you can begin to really, put these ESG factors on the table and begin measuring and really having serious goals against them. And so on that point, I just want to make one more point there, which sometimes there's fear. If you're not in a good place, then you don't want to talk to anybody about it because you're afraid you'll be shamed or, so. But the fact of the matter is, I think one thing that many of us are championing for is it's about progress, not perfection. So that no matter where you're starting, if you don't have a diverse team, if you don't have diversity on your board, if you're not looking at your carbon, that's okay. The key is it's time to start and set some goals and measure the progress against those. And I believe donors will be understanding of that and indeed may be willing to fund some of it.
So you brought up a bunch of really interesting issues. I want to go back to an article that you actually wrote in Forbes in September of 2021, saying, with the focus on DEI, as I think, I would say it's fair to say that most nonprofits, if not all nonprofits, are aware of and focused on DEI issues. I mean, it's become a priority for, almost all industries. Orr Group is, spending a lot of time in the category, and we think we've made a lot of improvement. We know where we're failing. We think we don't know everything, but I'm saying we are working on it hard. And in that article, you said maybe we should add the letter D to ESG. Now, what I'm always hearing is, well, D is in the category of S and a little bit of G. But what's your feeling? I happen to really agree with you, but what's your feeling on that?
Yeah, well, I am a strong advocate of separating out diversity because it's so darn hard to find in the data. It does sit under S, and that's where the diversity of your workforce shows up. It does show up under G. That's where the diversity of the board or your C-suite could be. So, I kind of really, ESG came together, as three terms that sort of don't belong together. And the risk today is that those that measure ESG and provide scores, too often, if one of those letters, so you're really strong in environmental, but let's say you're terrible on diversity and governance, you can end up with a high ESG score, and it's totally misleading to your donors or your investors, depending on who's giving capital and why. And that needs to change. I'm not even convinced the three letters should ride together. And I definitely think there should be more transparency around the D, which is hard to find today inside of all that, other data. Now, as you know, Steve, for the private sector, the SEC is poised to put forth disclosure requirements. And some people are all in a tizzy about that. But indeed, that is just common sense to let investors be assured of what they're investing in. Today, anything can be put under the label of ESG with no criteria underlying it whatsoever. And that's not fair to investors, and that's just not right. And it could be existential to the broader ESG movement if it's just a bunch of fluff and there's no there that can be demonstrated through data and measurement.
Yeah, so for our audience, organizations like NASDAQ, that brings companies public, and you trade on the NASDAQ platform, they've required companies to have diversity on boards, which was really a dynamic move, but heralded as a huge positive. And so your statement about 2 or 3 years from now, sitting across the table from a donor and having an ESG cognizance and story for your own organization, I think I would take that to the bank, because it is vital, and our industry is not as well versed as we should be. It's coming for sure, but just look at these numbers in the of those who invest dollars, 1/3 of them are concerned about ESG standards, and that has not translated yet to donors coming to nonprofits saying, hey, wait a minute, I don't want to invest in your organization with no focus on ESG, or you don't rate highly enough on ESG. So it hasn't happened yet, it's true, but I think it's coming, Jean. I couldn't agree with you more.
Well, I started by talking about next gen, and among next gen investors, 95% of them say they want to practice socially responsible investing. If you're a private sector business, you kind of live and die by what next gen is doing, right? Because that is the future of your business. Today, of course, it is your business too, but it's a portion of your business. In the future, it will be, the lion's share of your business. And the same is true for nonprofits. And next gen has a really high bar, and they really care a lot about authenticity, more so perhaps than any generation in recent history, and hold organizations accountable to that. So if I'm a nonprofit leader and I haven't really gotten much traction on this front and don't really know the space, I might be a little concerned. What I would advise for some of you is there's hardly a company out there today that doesn't produce a sustainability report, just as a starter. Flip through some of them and you'll begin to understand the kind of things they're talking about, the kind of things they're speaking to, and it might be helpful. But ultimately, I do think this is a space where you might need some outside help that brings knowledge and expertise. And Steve, I don't know if that's actually something, your firm is doing specifically as a service, but it's great. I know you're championing it. I know you're helping, but it's a greatly needed focus area.
I appreciate the nod. We are doing quite a bit of work in that category. So it's becoming for sure more and more important, along with, DEI and culture and all the issues that we all are very, very concerned about. So yes. So I also wanted to reference if you're struggling with the issue and you want to really understand, how other organizations are dealing with it, there's a nonprofit called Just Capital. Paul Tudor Jones, who's the founder of Robin Hood in New York, I'm sure everyone's heard of that. He founded Just Capital, and it's really his current passion. He's been a client. Just Capital has been a client recently of ours, and it's amazing because their numbers are startling. And if it works this way in a for-profit field, imagine it's going to have a similar impact there. So, in the public markets, companies that rate high in ESG trade at a 2.4% premium to companies that are on the lower end of the scale. Now that any CEO in the public sector would stand up and say, "Oh my gosh, I'm going to change," and they are rapidly. Well, those same investors are coming our way, to in their donation headspace, and that's going to make a big difference. So I'm just giving you more evidence. So go to Just Capital's website. You can learn all about the way they view that.
Yeah, that's excellent. Just Capital is an important partner of ours for what it's worth, and we have nothing but respect for the work that they do, and it's really a good tip to check them out.
So how you mentioned barriers for nonprofit organizations to approach the issue, to lean into it, to actually impact it, and clearly resources would always probably pop as the number, which you already said. What are some other barriers in your mind?
Yeah, and I'd want to say the resource issue is a challenge and an opportunity for nonprofits. It's a challenge in that you might not have the kind of budget to go get a strategic plan put together around ESG, but there are plenty of funders that I believe would be willing to underwrite that work. And so don't be shy about understanding, we need to invest X first to build a plan, and then, really to measure and report out what we're doing. So I think it is an opportunity. I think the other potential barrier is just not being in what I call the streams, because it's not really a dynamic topic that we're hearing a lot about where nonprofits gather or get together to compare notes. It can leave you a little bit outside the loop. So even if you're a nonprofit, I would really encourage you to look at some of the private sector conversations, dialogues, events, et cetera. And I think it's a great way to just, continue to build your confidence and your knowledge base around what is this and what should my firm be thinking.
So we're approaching the last quarter of this session. I just want to open it up. If anyone has questions, please throw it into the Q&A or the chat. We're happy to take any issues that you have. If you're having difficulty understanding, either the impact or what all this is about, it's okay. Ask seemingly dumb questions, because let me tell you, in the last year, I've had to ask a lot of questions that I thought were pretty basic and find answers for them. So there you go. Endowment funds. Obviously issues like Russia right now. There's a huge to-do about, should we be investing in anything related to Russia, oil and gas, etc. How big of an issue do you think that is right now?
I think it's huge, and I think it has everything to do with ESG. What I think we may see, and it's at one level troubling, at another level hopeful. I think in the very near term, we're continuing to hear calls for more production in the US for energy independence, more production of fossil fuels. But there's no question this will help accelerate our transition to renewables and to a more climate-friendly approach in terms of our energy. So I think that in the mid to long term, it's going to actually be a good thing. In the short term, I think it's going to be hard. I think we're going to see increased production. A lot of folks don't understand today, Steve, in a number of states across the nation that are producers of fossil fuels, they're passing laws that restrict their pension funds from investing in any asset managers who are sort of climate forward and moving away or calling on fossil fuel companies to go through a transition. So for instance, that forced BlackRock, which is the world's largest asset manager, last week to say, oh no, we really are about fossil fuel companies. So it's a time of a lot of noise and fear, but I do think it's appropriate that we give a humanitarian focus if we see the cost of energy go through the roof. And I'm hoping it doesn't mean more production of fossil fuels. But even if that happens, I think, like I said, it's speeding our path to renewables and a different way forward with energy.
Yeah, unfortunately, it probably does in the short term mean going to turn the spigots on a little bit more, which is a shame, but that's the way, we need energy.
Yeah.
Yeah. So for endowments, it's a huge conversation, and I'm sure action. You mentioned BlackRock. Larry Fink, who's the CEO of BlackRock, I'm sure in 2022 wrote his annual report, and he featured ESG.
He did.
This is the most important thing. This is what BlackRock is focused on, and what the investing communities are focused on. And for the nonprofit folks who are with us, we're talking a lot about the for-profit space, but Jean and I think, agree on this, that because we come from the for-profit world, but we've been in the nonprofit space for so long now, we see the parallels, and we see this as a hugely important vehicle, whether you're investing monies in endowment, that should be sensitive and seeking ESG types of investments, or whether you're talking to donors in a more and more sophisticated manner. Everyone is seeing the impact and the concern everyone has about DEI. Well, ESG is really just a slightly bigger platform, involves more of socially sensitive types of issues. There's a question here: do you see the turmoil causing ESG focus to shift from those of us who do offer direct disaster relief?
I'm hopeful there. I'm not sure people will necessarily align ESG with that, but I do think there's a huge opportunity for all of those engaged. I mean, I haven't looked at the numbers this morning, but yesterday I think they were saying the numbers of refugees now is 1.5 million out of Ukraine. I mean, this
in 2
is
weeks.
A massive,
Wow.
massive global crisis. And so I do think it is an opportunity for those engaged in disaster relief. This is not a time where I think someone's going to say, oh, and by the way, where are you on ESG? I think those days are coming, but I don't think anyone is using that lens in this crisis to say, should I support them or shouldn't I? But I do want to just, if I can, Steve, go back to your touch on endowments. We've been exceedingly intentional at National Geographic around our endowment and where our capital goes. And I will say to any endowed organizations, no matter the size of your endowment, the investments you have, that is a tool. That is a tool for change. And too often, I think that nonprofits and philanthropies have looked at, either their granting or their supporting work as their core mission, and they've kind of put the endowment over there. But I think it's really critical, particularly for foundations who typically, have a spend of 5% or less. It means 95% of what they have are not being used for their mission. So this is a huge opportunity, both for nonprofits and for foundations, to extend the reach of their mission and their work. I also will say that if you've watched any of the activity, there have been tremendous shareholder moves, proxy battles going on, and they are, they are seeing success unlike we've ever seen now at the annual meetings. And so there's this debate about, if you have an endowment, should you totally, get out of fossil fuels, or should you stay in and fight? And I think that's for every organization to decide in its own right. but I can say it's made a huge difference to have the likes of a State Street or, BlackRock or some of the larger asset managers, agreeing that some of these changes need to come forward. And those changes would be harder to make if we didn't have them invested and fighting for the right things.
Fascinating. So this other question here is good. How can nonprofits leverage their case even though they sit outside of traditional investing? And where I analogize that to what every nonprofit was thinking, and we were advising them to think this way through the pandemic, to build their case, to make the case of what you're actually doing to impact, COVID positively, dealing with kids and you're protecting, stress that. And same thing through, all the diversity issues. There are so many organizations that are doing such great work with minority groups and with, on education and with so forth and so on. And they can make a terrific case around what people are really interested in. So what's the analogous case here in your judgment?
Well, first of all, I think what you just said is right on, and it's the reason you're so good at what you do. I think, one thing I would say is if you had a donor coming and they spoke a different language, chances are you'd find a translator to meet that donor where he or she is. For many, particularly new, but in some cases really significant donors, they don't speak the nonprofit language and they feel a little uncomfortable in the way they're newbies. That's how I felt when we created the foundation. It's like I felt like I was wearing someone else's clothes for a little while and didn't really have my sea legs. I think it would behoove nonprofits to spend a little time looking at the pitches of some of the startups that are out there, looking at how they talk about things like the difference they're going to make, how, the runway that they have to spend before they actually, plan on seeing a turnaround, et cetera. And I know it's a little bit of a crazy thought, but I just think nonprofits could actually, perhaps learn a lot from looking at what the pitch decks are from some startups out there to understand how to talk to their nonprofit donors as well.
So the last question I have is about, you've used National Geographic a bunch of times because you're the chair of the board. What are the specific things that the organization has done the last 2 years to address, a variety of these issues? I'm sure there's been all kinds of board conversations and actions taken. What are sort of lead issues of change that you've experienced?
Yeah, well, we really believe in the power of, science, education, exploration, and storytelling to change the world, but that's not good enough. I think that we are and have been since our founding world-class storytellers that have the ability to take some pretty complex things sometimes and bring them to individuals to understand. But we have very impact-specific focused initiatives on top of that. So one area, for instance, Steve, is something called Pristine Seas, where we've been engaged with countries all over the world in getting marine protected areas set aside in the most pristine areas of our ocean around the world. Hugely successful. We've had 24 individual, they're called MPAs for marine protected areas, designated in collaboration with these other countries, representing over 7 million square kilometers of ocean out there. And it's really exciting work. We're doing similar things on land around the world. So it's no longer, you just can't tell the stories anymore. You really have to make sure that you too as an organization are demonstrating impact. And I think we're doing that in new and exciting ways at National Geographic.
Congratulations, the world needs it. So we wish you all the luck and keep up the good work, kind of thing. So Jean, thank you so much. By the way, the last half was terrific as far as the Wi-Fi. So someone must be behind your screen, tinkering with it. And so thank you for that. But really, this has been very enjoyable. Really appreciate your insights. And I think our audience does as well. And have a great day. Thanks so much for your time.
Thanks for all you all do. You too, Steve. And thanks for putting up with this through this Zoom. Thanks so much. Appreciate all.
Bye-bye.
Bye-bye.